If you're a car buyer this year, you may be even further underwater. That's right, negative equity is impacting the car buyer across the globe. And now, unfortunately, a whole new element has actually hit the car market. Since 2019, we've seen car prices average about $40,000 for a transaction to now where we're at a place where people are paying over $52,900 for your average transaction. A lot of car manufacturers are jacking up MSRPs, driving up the prices. They're also only limiting sales to vehicles that have higher margins. For example, pickup trucks and SUVs, we know those are very popular. It's harder to get your hands on those smaller, cost-effective vehicles. And it's even more alarming now that people are in a place where they're spending almost $1,000 an average for a monthly car payment. Yeah, that's right. And even on top of that, we have banks adding to this whole problem where they're actually extending car payments out, not just 3 years, 4 years, or even 5 years like we used to. They're actually extending it out to 7, 8, and 9 years terms with $1,000 a month payment. Yeah, just so people can get into that $120,000 pickup truck, which is grossly overpriced to begin with. And people are now finding themselves buying a year ago, a year and a half ago at the peak of the market. And now the market's starting to slightly settle down and people are finding themselves underwater in a negative equity situation. In other words, if they were to get out of the car 2 years into the payments, they could find themselves actually owing the bank more than they can actually get for the value of that vehicle. It's a very, very bad place to be. We also can't forget about the average inflation rate being around 3.5% as it's been climbing. Obviously, things are settling again and we're starting to see interest rates starting to stabilize. But there's some whole new conversation about what's going on in the market, and it's very, very troubling. And I hope to think that you guys aren't necessarily part of that or actually subject to some of these issues, but the trouble is imminent. That's right. There's a whole lot of issues brewing, and I have to bring it to light. Did you know that car insurance is the unknown? Everybody knows that everybody needs a roof over their head. You need food in your mouth. And now a lot of people are paying for car payments and unknowingly often are finding themselves underwater or in a negative equity situation. And now compounding to that is just the overall cost of living. We talked about inflation being 3.5%. Obviously, you've got to eat and sleep. But now what you're having is to add on top of this, car insurance rates are on the climb. Yeah, there's a big reason for that. And unfortunately, this is just adding to the pain, to the straw that broke that camel's back. We're starting to see what's going on add on. So it's not just about car prices anymore. We talk about increases in fuel costs. Obviously, that's an element that a lot of people are talking about. That's always a hot button. Now, while things have stabilized, the fact is there's some big ups and downs in that particular sector where you've got to buy diesel or gas to fill up those vehicles that you're paying way too much more money for than you should be in the first place. And now the other element is insurance companies are trying to take a strip out of your hide as well. The last couple of quarters, we've now seen a slight decline in the cost of a brand new vehicle. Used vehicles still remain relatively high, although there is a slumping there. The fact remains is people are still paying a lot more money than they probably should for a lot of these vehicles. And I'm not even sure we're ever going to get back to where we were about 3 short years ago. But now what we're finding is inflation sitting around 3%. The growth of new car sales and the prices have only gone up about 1.3% in the last little bit. But we can't forget about another factor, and its insurance has gone up about 19% in just 1 year based on the Bureau of Labor Statistics. That is punishing and cruel to people that are already on the cusp of struggling to make ends meet for making house payments, eating, and even as well making your car payments. Nobody wants to miss a payment and have that repo man show up at your door. There's been a whole pile of reasons why insurance rates keep climbing up, and trust me when I say this, we all know it's a necessary evil, but the sad reality is they make every excuse in the book to crank up insurance rates. But some of the reasoning for some of these increases in insurance, how it's grossly outrunning the pace of inflation, is some simple factors. For example, the much increased cost expense, obviously, for repairs. Now, we know supply chain was limited, and of course, now to get replacement parts for your new car or your used car, those parts have gone up, harder to come by, and when we do get them, you're finally thankful, and a lot of those parts have gone up 25, 30, 50% of what they were obviously 3 years ago, and now we're at a place where people are just paying more for those parts. And those parts, when a car gets damaged or breaks or some other issue is in a little fender bender, those costs get transferred right through, the insurance company gets billed, and then, of course, you at the end consumer ends up paying the price. There's also medical care and as well expenses associated with that when there are collisions and people have to make claims because they're hurt and they got a sore neck or a back or an injury and the claim goes through. That also causes a lot of increases in the insurance companies. And as well, on top of that, insurance companies have been stating that riskier behaviors have literally been a significant part of some of these changes. We know that there's natural growth in the industry and there's more cars on the road today. During that last couple of years, people were ramping up. They were buying more cars, but there's also that natural population growth and there's more cars, more people on the road, and the densely population that we're finding in a lot of these busy cities is increasing the collision rate. And unfortunately, those claims then go to the insurance companies, hence we feel the burn again. So some of these expensive repairs have been a significant contributor. So have some severe weather elements. Obviously, with earthquakes and floods we're finding in California, Florida, and some of these issues that we're seeing with natural Mother Nature taking over has had an impact. You get a flood, all of a sudden, next thing you know, a lot of vehicles get thrown away. They're in the dumpster. And unfortunately, we've even seen that up here in Alberta. Calgary, for example, was a particular city that was underwater because of some massive flash flooding in a spring. So a lot of these things are happening all over the globe. North America, we're starting to see a lot more of those natural events taking over, and that's having an impact. Of course, insurance companies are having to pay out for some of these major losses. There's also been riskier driving behaviors. And while traffic fatalities have actually dropped since 2021 slightly, they're actually still up overall, according to the pre-demic levels. Obviously, things have naturally increased over time, and this is just where we're at. The Department of Transportation also claims that a lot of people have picked up riskier habits. I personally see a lot of people running red lights, speeding, and clearly the increase is there. I find myself cut off more constantly, and there's a lot more road rage on the streets today than there was even 5 years ago. So that's all on the upswing, and it's all about attitudes and behaviors, and unfortunately a lot of people are adopting riskier behaviors. And unfortunately, as I said, with more dense population and more dense traffic, increases the risk of all of this. More chance of cars, collisions, impacts, and of course it just drives up the anxiety. People get excited, get rammy, they just get mad and angry out there. People need to slow down, but unfortunately people aren't. And now we're having a negative repercussion because of a lot more collisions on the road. Now, word has it, US personal auto insurers are actually claiming that they're underwater and that they're operating in an underwriting loss, meaning that a lot of times the payouts exceed what they're actually bringing in from the customers, and they don't truly believe that they'll be out of the woods until at least 2025. Now, we all know that that's a bit of a hit and miss, because also with the adoption of a lot more EVs on the market, we already, one of my previous stories which you saw, where we talk about the cost of a brand new EV battery for an Ioniq 5 by Hyundai, we're seeing at $50,000, $60,000 replacement cost here in Canada, puts a lot of these insurance companies a lot more risk. So now they're having to charge increased rates for the cost of the batteries to recoup that. A lot of the parts on these electric vehicles are more expensive, and we can't forget Tesla and the oversized glass panels, and a lot of the other components just cost a lot more money that they aren't necessarily used to. And that's also a significant reason why some of these insurance companies don't want to be in the black. They definitely are trying to recoup those costs. So while I'm sure not too many of you are too worried about insurance companies, they always seem to strike the balance of getting ahead, and it's always the buyer, the consumer like you and I, that find up having to pay more and more and more every year. The fact remains is increased overall cost of living, higher premiums, inflation driving interest rates at your bank, massive increase in the housing costs as well as food costs are all major factors. And then throw on the back of that people have unfortunately paid way too much for a lot of their vehicles in the last 1 to 2 years and now find themselves underwater in a negative equity situation, only to be slapped right in the face with higher insurance rates. This is all coming at the worst possible time, and people are finding the struggles are real. So it's a difficult rock and a hard place to squeeze out of, but the bottom line is if you're in a place where you're making that decision to buy a new car, maybe think about some strategies. Maybe buy an older used car. Possibly buy a new car that's more cost effective. Do your research on fuel economy and insurance costs for that specific vehicle you've been interested in. Don't overpay, and certainly do not budget for what your monthly budget is. Budget for what the total amount of that vehicle's value is worth. Don't go in there with, I can afford $800 a month. Go in there with, how much is that vehicle cash? $25,000? Yeah, I can work that out and that can fit the bill. So don't get caught up paying as much as the bank will lend you and then you're in a place where you're actually potentially underwater with this huge rising inflation, insurance, housing, and food costs. It's a terrible place to be, but again, not all is lost. Just make sure you apply some of these strategies and you can come out ahead. Hope that helps everyone. Be sure to check out that video right there. What's going on with the truck market and why is there such a crisis? Hope to see each and every one of you on the next one. We'll see you real soon. Bye-bye.